discuss the market and day forward with Anil Sarin, who's also joining us on the show. Anil, afternoon. Let's start by getting your views as a market participant from RBI Governor's commentary, especially on trimming of growth and taking the inflation window corridor slightly higher on the upper side. As a market participant, how did you analyze that?
So clearly, I mean, higher interest rates generally have a negative correlation with the stock market. And obviously, the market is quite happy with the fact that the rates have been sort of kept in the way they have been. The underlying thought being that, wages and food are not as difficult a problem for Indian policymakers as they are for some of the Western policymakers. So I would endorse whatever has happened today.
Right. Anil, also, do you think that this makes the prospects of equities slightly difficult going forward? Because eventually, equity valuations will catch up with the higher inflation reality, right?
Yeah, so I think that's a fair point. But whatever we have done, I mean, we are as worried as anybody else regarding the state of the inflation and what it does to the margins of all the corporates. But when we sort of went back and saw over the last 20 years, time periods when inflation was rising or when crude price was high or when interest rates were high, and we did not find any great negative correlation. What I mean by that is that we did not find that when the oil prices were shooting up very high, the stock market was correspondingly coming down sharply. That we could not find that. Similarly, when interest rates were going up, we did not see a clear trend of the stock market coming down. So while intuitively inflation and corresponding to that, the interest rates are a problem, but empirically, we, at least in the last 20 years, we don't see that correlation to be as negative.
Anil, what's your view on valuation of the market, especially the broader market, the mid-cap and the small cap? Does it merit a relook after this corrective phase, or do you find it still at a premium versus the reality which is going to bite them on their margins front in the earnings season?
So, we are small players who like to look at bottom-up names, and those companies that we like and we are sort of, tracking, they seem to have some ability, some kind of resilience to higher input costs, some ability to sort of pass it on. That being said, the larger players are going to push it down to their supply chain where many of these smaller players find their place. So all said and done, there was a period last year when there was a lot of frothiness. Then January, February, you know what happened. Since then, there has been a little bit of an uptick, but we continue to see value in some of these small and mid-cap names. That being said, I'm not making a generic statement. I'm talking about a few stocks out of the whole lot.
Where all have you been shopping in the last couple of weeks and months in this corrective phase? Areas where you have raised your exposure, or if not names, at least the category or kind of stocks which you've been adding?
Yeah, so clearly, one is banking and financial services. They are under pressure because of the foreigners selling. But in terms of what is happening in the economy, in terms of credit growth, advances growth, etc., that is quite positive. So we like that sector. We also like real estate, even though there will be some short-term hiccups regarding all the input prices going up. But after many years of being down, this sector is sort of coming up. Mining is another one. I don't know how many stocks there are to play over there, and you might have a view about commodity, exposure. That being said, after many years, mining is sort of coming up. Textiles coming up. Capital goods. So there are opportunities out there, generically speaking, in these sectors.
Mm-hmm. Anil, what about real estate? As in, what category of real estate stocks do you have in your portfolio? The one benefiting from IT wage hikes, that region, the southern region? Or are you also looking at Mumbai-based realty players? Some of them recently got acquired by unlisted companies. What is the kind of category of real estate stocks which you own?
So we own actually quite a few. So we have one based out of the north, a couple based out of Mumbai and West, and another based out of Bangalore. So clearly, the south one, you nailed it. I mean, it is IT, and ultimately, people are going to be spending that money that they're earning now. But even in the other parts of the country, the inventory levels have come off. They are below 2 years now on an overall basis, and prices have in certain micro markets, prices have actually started going up. So these real estate tends to be a long cycle, 7, 8, sometimes even longer number of years. So you've had 8 down years. It is turning around now. So it is not, we feel confident that it's going to remain strong for quite a few years into the future. And now is a good time to be building up positions.
What are your thoughts on the big banking and NBFC merger which recently got announced? Not on the stocks of these companies, but in general the institution which it is turning into.
Yeah, so I mean that it is clearly with the RBI stance towards NBFCs, progressively, trying to bring the same norms and to avoid the regulatory arbitrage that some people accuse NBFCs of enjoying. So that pressure was anyway mounting, and that merger obviously creates headroom, both in terms of the MSCI, the weightage, etc., and also in terms of the FII window that it opens up. So that is good from the stock standpoint, and also this mix and match. The low price deposits of the bank with the expertise, brand, and the distribution of the NBFC, that is the housing finance company. Together, I think it is more than the sum of its parts, and it is that way. It is also showing up in terms of the EPS calculations. I mean, the dilution is roughly similar to the earnings. So you are diluting around whatever 34%, and you're getting a 33% pickup on the EPS side. So I think all things considered, it's a good deal.